Greetings from the Charter School Office. I'm Albert Bertram, the Finance Specialist for the office. So this sheet in front of you is the review of the audited financial statements. It essentially takes the audit and summarizes it in 4 pages and then provides a couple other calculations to help you compare and ask the right questions and that kind of thing. Also, when comparing from year to year, it's easier to compare this sheet from year to year than it is to try to compare those large audits. So that's the premise behind this, and instead of having the regional board trainings, we are trying to bring these directly to each school with their specific information via video, so we hope you enjoy this delivery method. So as we start in the sheet, we have the statement of net position. This is directly derived from the audit. To show you that, I will use total assets as an example. So total assets is $482,195. So if we go to the audit, here's the statement of net position, and then here's our assets. Here's our total assets of $482,195. So you could match up the other numbers if you wanted to. I won't do that for time purposes. So you can look at those. Down here we have our ending net position. This is the June 30th, 2014 ending net position, and then this is the June 30th, 2013 net position. So this lets you compare from year to year really well, and then as these come out from year to year, you can compare that and understand if it's trending upwards or downwards, and then ask the appropriate questions why that's happening. As we move down, this is the balance sheet general fund current assets. So I'll show you where these are at on the audit as well. And then over here is our balance sheet general fund classifications. So I'll show you where this is. We'll go back to the audit for a moment. The balance sheet is 2 pages after the statement of net position. So 1, 2, there's balance sheet. Now it's important on this sheet to know that there's different funds. So this is the general fund, the food service fund, the Oasis fund, and then total. For these amounts, these are general funds, so we're going to stick in this column. It is important to look at these other columns, and we do in our office, but for this part of the sheet, we're only sticking with the general fund column. So these should match up with those amounts, the cash, etc., for the assets. And then as you scroll down, here's the fund balance classification. So there's non-spendable and then unassigned. So we'll go back to our sheet for a moment. Here's the assets. So these should match up to what's on the page there in the general fund column again. And then over here we have our fund classifications. So these classifications are directly in the audit. So you can look up what these definitions are at any time. It's in the audit. So unassigned fund balance are amounts that are available for any purpose. These amounts are reported only in the general fund. So just so you know what that is. I won't go through these other ones because there isn't any for this for Bingham. So but note non-spendable are amounts that cannot be spent because they are either not in spendable form or are legally or contractually required to remain intact. So in most instances, non-spendable is associated with prepaids, which this is the case here. We have prepaids over here. You can't spend what you've already spent, so that's kind of fits in with that definition. So before we move down, we're going to move up. This column right here quickly summarizes, takes a snapshot of the activity throughout the year. So there's the beginning general fund balance, the revenues, expenditures, other financing sources, net change, and then the ending general fund balance. So this lets you see things pretty quickly without having to turn through pages or anything. Below that, we have some calculations from these numbers. So general fund divided by revenues takes the ending general fund, divides it by total revenues. General fund minus restricted is essentially the same calculation, which is why these are the same. The only difference is some schools have a restricted amount down here, so that's why these are the same. Below that we have general fund divided by expenditures, so that's divided by this number, ending general fund balance divided by total expenditures. Some prefer the expenditures line item for whatever reason. We do both because it's important to look at both. If there is a large capital outlay during the year, that could skew this number, and that's why we prefer the revenues, but it's good to look at both just to try to figure out what's going on. These are not meant to be absolutes, but indicators to show you trends and that kind of thing. So down here, this takes the ending general fund balance and divides it by the beginning general fund balance. If this is below 100%, there was a negative net change. if it's above 100%, which this is well above 100%, there's a positive net change. So there is a positive net change. So that's good. But we'll discuss some of the details down below. As we move into this section, these 4 boxes are a summary of the note section of the audit. So they essentially take the written notes and some of the tables in those areas and provide numeric tables to quickly look at that information. So notes payable is usually associated with a state aid note or other short-term borrowing. Long-term debt, though Bingham doesn't have any, it's usually associated with like a revenue bond. If a school purchases their building with a bond, that's usually what we'll see in that column. Over here we have capital lease. So this is the lease information for Bingham. This is the building financing method. So usually it's either you have a lease down here or you have your revenue bond up here. So this is the model that Bingham utilizes. Over here is the management fees. Here's the management fee based on the notes again, and then there was a contribution of $71,000. So that's why this was that's why that's subtracted like that. So percentage of state aid. Now this takes the amount earned, the total earned, and divides it by the total state aid on the next page. So I'll scroll down there for a moment. So that takes the total state aid. So that's not the contractual amount. That's just a calculation for us to compare from year to year, or from school to school, excuse me. So earned divided by fall 2013 again takes the total earned and then divides it by the fall 2013 count, which is the corresponding count to this fiscal year. So that count is used in a couple calculations. So that's why that's used. It's the count for this year. Here's our square footage. If this is inaccurate, please let us know. There's a couple calculations based off it. All these are formulas though, so if it's off by a little bit, it'll just automatically update everything. So and it'll slightly change. Hopefully it's accurate though. Taking that in consideration, we'll move over here. Revenues per square foot takes total revenues divided by square footage. Expenses per square foot takes the total expenditures and divides it by square footage. You'll notice that this is larger than this, and yet there's a positive net change because of that other financing sources up here. So it's important to these type of calculations will show you that trends that isn't always obvious at first. So here's the difference between the two. Now payment per square footage takes the total payments for the lease. So if it was a lease, it would be the total lease payment for the year. If it was a revenue bond, I usually include the principal and interest payments on that bond during the year, and that's where this number is derived from. So $12, that's what that is. Over here we have operations and maintenance per square foot, which is just another calculation to compare from year to year. So it takes I'll scroll down, takes the operations and maintenance line item, then divides that by the total square footage, and that's how that's calculated. Then this square footage divided by fall count just takes the total square footage and then divides it by that fall 2013 fall count. So that's that. As we move down into the general fund comparison, this column is the June 30th, 2014 audited numbers. This column is the June 30th, 2013 audited numbers. And then this is the difference. So this lets you see quickly the difference between the two. And Bingham dropped some grade levels, so that could explain why there's a drop from year to year. So I should have included that. So that's what that's all about. Now, if you don't know what these codes are here, these numbers, these are accounting codes. So it's important to understand what all these line items are. So if you don't, I'll show you a quick trick. I'll have to go into a Word document. So go into that Word document. Okay. So I took the accounting manual, I put it in Microsoft Word, so you can search it. So you come up to the Find feature. I believe this is Word 2013. Find feature. Then come over here, type in what you're looking for, and then push results. We'll use basic programs as an example. So then as you move through click over here, it'll move you through the document and find it all in the document. So you obviously can't use broad things. I think instruction has too much results in the document, so you have to kind of focus your search, but it's a really good tool to find things quickly. So here's the accounting code 110. Basic programs are instructional activities, including enrichment, designed primarily to prepare pupils for activities as citizens, family members, and workers. as contrasted with programs designed to improve or overcome physical, mental, social, and or emotional handicaps, includes pre-kindergarten. So I read that pretty quickly, but it's I was just trying to show you that you can find exactly what everything is. We could scroll down and see more, but for time we won't. So we'll come back here. If you have any questions, if you don't know what these are, we can figure it out pretty quickly, and I just showed you a really good tool to try to do that on your own pretty quickly once you get that accounting manual into Word. So as we move down, you can compare all these. These again up here are revenues. These are the expenditures down here. Compare the difference and ask why there is a difference. Now for Bingham, there's probably going to be some fluctuation due to that grade issue, but it's important to know why things happen. So over here, this is the ending general fund balance. This should match up with the ending general fund balance in that little box in the upper right hand corner of page 1 that we went through. So down here, these are the budgetary comparison. So this is the original budget, the final budget, the actual. These are from the audit again. The difference, so this takes the difference between the actual and the final, and then the percent change between the actual and the final. So here's some calculations. This note here is just stating that the original budgets were due July 1, which is well before that fall 2013 count, which usually there's a budget amendment needed after that count for many schools. So it's just a reminder to myself and others in the office that that is the case, and we'll all be on the same page in that respect. So moving down here, we have instruction as a percent of revenues. So this is this number's not. This was calculated from the June 30, 2012 audit. I don't have it displayed on the screen, but I'll show you how to calculate it. And then these two are calculated on the sheet. So I'll go up. This is calculated by taking the total instruction expenditures and dividing it by total revenues. So that's what this trend shows. You'll see there's a slight decline, which again should probably be understandable with the grade drop. So to know what those numbers are saying, if they're not absolutes, but they're important to know the relationship. So if revenues declined at a smaller rate than instruction expenditures did, that's why there was that decline from 13 to 14. So another example of how these numbers could be influenced would be if a teacher resigns that was getting paid $50,000 and a new teacher is hired for $30,000. That's going to impact this ratio, but it's not necessarily meaning that the school is receiving less instructional services. They just have a different wage rate for that teacher. So it's just a way to, again, try to stimulate thought and get you to ask the right questions. So over here we have revenues divided by fall 2013 count, which takes the total revenues and divides it by that fall count. Same thing with expenditures and then the difference. This is just another calculation to compare from year to year and see how things are trending. So as we move down into the third page, this is the enrollment numbers. These numbers are derived from CEPI. So I don't like using acronyms that I don't explain, so let me go to the web page. So CEPI is the Center for Educational Performance and Information. This is a state-operated website. To get to these numbers, you come to My School Data, then you go through the filters, and then you can pick student count, free and reduced lunch counts, special education, whatever. And then there's these really massive spreadsheets, and they go all the way down to 91, 92. So you could look up any of these numbers at any time. They're available to the public. This number was the unaudited number I received via Epicenter, which is the file submission program we use between the charter school office and the school. That is a number I received that's unaudited on the DS 4061 sheet, and so that's subject to change. So that, just so you know, that one may change if the audited number is different from that number. So over here we have a percent change equation, which takes the count and divides it by the other count to see how the percent change. So this is for our numbers people who like to see numeric percent change. Again, there's a drop due to the grade reduction. And then below it we have a graph which shows the enrollment trend, and this is for the visual people, so we have a visual and numeric representation of the data. So below that we have our free and reduced lunch counts. These are again from CEPI. These are all from CEPI. And then over here is our percent free and reduced lunch count, so it takes this count and divides it by the total fall count, and then that's where these percentages are derived from. So there's a numeric example. Again, we have our visual display down here for those who are visual people. Now as we get into page 4, this is the notes section of the audit. So these are not my words. These are directly from the audit. The only part that is my word is the very bottom part. So related party, this just talks about the Mosaica has a liability, or the charter school has a liability to Mosaic in the amount of $170,589 and $394,109 for the years ending June 30th, 2014 and 2013 respectively. So this is kind of telling us that there's a liability that's been carried over from year to year. That's a bad sign for us. And then again, this is specifically stated in the audit on page 27. So that's saying that the current revenues were unable to meet the current expenditures for the year, and certain things had to carry over. So that's not a good indicator for us financially from the charter school office perspective. And we'll probably provide we will do some sort of follow up with this information. So the building lease, there's the building lease information that was summarized in those 4 boxes on page 1. Here's the state aid note. So SAAN stands for state aid anticipation note. So that would be the short-term borrowing from the state. That's that information again, all the page numbers. Here's the management company information directly from the audit, page 27. There's no findings, which was good. During the fiscal year, the academy's net position, so that's about the net position. Going concern is another alarming part of the audit. That's the auditor saying that there's a going concern for the financial stability of the school going forward. So I think that Bingham is our only school that had that note from their auditor, so it's pretty important to be aware of that. Page 29 of the audit states that. Contributions are, this is the contribution from Mosaic of $71,412, which was taken in consideration up in the management fees section of those boxes up there. And then this part would be the only part that was not from the audit, this bold part down here, which I've already brought up, that there's no long-term liabilities. However, those receivables were held from year to year. So what that is referring to is this right here. So the amounts that are carrying over from not just 2014 but 2013. So that carrying that stuff over is not a great sign. And this is a note from the field rep that board members have stated that bills aren't being paid by the management company, though funds have been allocated. So that's not absolute. That's something we'll have to try to communicate with the school and figure out. But we are aware of it. We have been made aware of it, and we will be doing a follow-up. Now, before I move on, before I finish up, there's something I want to bring to the attention of the board as well. This document was submitted for the amended budget, which is due January 31st, saying there's not been a budget amendment. And so if I go back and look at the original budget, which this was submitted June 24th of 2014, I'll see this preliminary fiscal year 15 budget, and that shows that the projected ending fund balances at June 30th, 2015 will be projected to be $37,573. Now, obviously, these numbers are before the count and before the school year, so that's why I stated it earlier that the original budget isn't usually accurate for a lot of schools. So I'm surprised that I got this memo submitted, though, because if I go to the quarterly statement, this is the second quarter statement, I see that there's I'm going to zoom in a little bit, this is kind of hard to read, there's a fiscal year 15 work in process budget. And if I scroll to the very bottom, the ending expected fiscal year 15 ending fund balance is projected to be negative $215,048.49. So that is not the same as the original budget. So I'm curious as to why this memo was submitted when there's a different work in process budget. So before I leave, I'm going to pause the video for a second and show something. Alright, I unpaused the video. I'm back in the accounting manual. This is an important thing to consider. So there's a violation of the Uniform Budgeting and Accounting Act. So an administrative officer of the school district or PSA shall not incur an expenditure against an appropriation account in excess of an amount authorized by the Board of Education. The administrative officer or an employee of the school district shall not apply or divert money of the school district for purposes inconsistent with those specified in the appropriations of the local school board. and there's the law reference. So it's important to note that if I'll go back to this thing. If this is the actual information, that there needs to be an actual budget submitted relating to these numbers, so that the board is on the same page and that we're on the same page. So we'll be doing a follow-up, but that's important to note, and hopefully that clears things up. So I hope you enjoyed the video. I'll go back to the sheet. My contact information is albertb@bmcc.edu. If you have any questions, feel free to send me an email. Hope you enjoyed the video. It's probably better than driving to a regional training that isn't specific to your school. So hope you enjoyed it. Have a good one. Take care and stay warm. And thanks for what you do for the kids in Michigan. Bye.